want to talk growth versus value stocks at the moment, how it's being played from an asset allocation perspective. Let's bring in Marcus Bogdan for Blackmore Capital for a bit more detail. Marcus, pleasure to have you on the program. As always, you're looking at the PE dispersion, the price earnings dispersion between growth and value stocks, largest in over 20 years. Why is this?
Good morning, Ingrid. Well, you've certainly seen a bifurcation in the Australian and international equity markets around growth and value, and the anticipation of growth, the historic track records of growth, particularly in the software sector, has been spectacular. And you've seen an absolute V-shaped recovery in that sector. And so if you look at the segments of value, and the highest quintile group of those growth companies is trading now on an average median forward PE of 30 times, and that compares to an average median PE for the lowest quintile of 12 times. And we're now starting to focus our attention back towards value, given the extraordinary recovery you've seen in growth, and looking at the portfolio pretty carefully in that way.
So when you look at a stock like Xero, a high quality growth stock in a lot of analyst minds, what do you look in terms of valuation though? Because that's what you've got to keep in mind as you're speaking about.
Sure. So we own Xero. We have reduced our holding as the share price has reached sort of record levels of valuation. Their price has recovered handsomely from its lows in March. And they've just recorded their full year result, where you saw revenue growth of 30% per annum. You saw the first maiden net profit of $3 million. But when you translate that back into valuation, and even if you're looking at that as on an enterprise value to EBITDA of around 50 times, or an EV to sales to revenue of 15 times, those numbers now are getting to illustrate almost a perfect score going forward. Their last financial year ended on the 31st of March, and they have seen some slowdown in additions. And I think with Xero, what we need to watch very, very carefully is the rate of business formations and the potential of issues with smaller businesses around liquidity and solvency. And so in the short term, as we're coming out of this recovery, we don't expect that rate of growth will continue at 30% as it has historically. It will slow, and hence we think that the valuation of the EV to revenue of 15 times is too high, given the backdrop of the underlying business.
So, okay, if you see Xero perhaps lose some ground, because it's done well, as we mentioned, particularly in COVID-19, it's been seen as somewhat of a beneficiary of the COVID pandemic. If you do see a slight pullback in valuation, does it become interesting again to you? Perhaps add positions?
Absolutely, and we're still holding the stock. We're particularly attracted to subscription businesses where they have large addressable markets, and Xero certainly does. I mean, it's dominated in Australia. It's effectively benefit from the digitalisation of accounting cloud software in the UK, and they're also in the US, where they are really at the foothills there of digitalisation. So as a medium to long-term thematic, we still find the underlying business particularly attractive. We just find that the current valuation, given the short-term imposts on trading, are just too high at the moment.
Okay, I want to talk Waypoint REIT, because this is one you're looking at the moment. I'm finding REITs particularly interesting in this kind of environment. What do you make of Waypoint, and what do you like it going forward?
Yeah, so Waypoint, they've just changed their name in the last week. It was the Viva Energy REIT, and so they are a sole provider of service stations and convenience retail. So they have the Coles Express as a tenant on their sites. They have around 490 sites throughout Australia, and the way that they've structured the business is very attractive. The WALE or the leasing expiry is over 11 years, so you've got long certainty there over the tenant. It has annual escalator clause of contract of rental growth of 3% per annum. And the gearing level at the moment is around 30%, which is at the bottom end of their range of 30 to 45%. So a very solid tenant in Coles Express and Viva Energy. A very long lease book, and also the fact that they can grow that rental income by 3% per annum over that period is particularly attractive. And so their distribution yield is around 5.9%, and we can see that will grow at a 2 to 3% rate for the foreseeable future. And so in that respect, we think the valuation and we think the distribution yield is particularly attractive.
Okay, so that's Waypoint, prior Viva Energy, of course, as people may know it better, but it's changed its name. But looking forward, I guess, any other REITs that you like and in what sectors? I mean, obviously you've got to be very specific with the potential asset class of the REIT that you're looking at. So are there any others?
Yeah, I mean, we certainly like the thematic around logistics, and we like the property holding company of Goodman Group, and we've recently added to that position in the portfolio as well. So we definitely like those long-term thematics. We're less confident around shopping malls and more traditional REITs, and we still see greater issuance there. So we like the sole purpose REITs such as Waypoint, and then for logistics and online play, certainly Goodman Group.
Marcus, anything else you're watching at the moment? We're talking a lot about at the moment, I guess, stocks that can weather the storm of the pandemic, and you're talking about long leases for Waypoint, things like that, to give you a bit of certainty. Anything else you're watching at the moment that potentially could benefit or weather the storm of a global pandemic or hey, trade wars too?
Sure. I think the other one that we've sort of circled back to is News Corporation. The biggest asset in News Corporation is realestate.com. So they have the recovery there in auctions and property, and they've also well positioned in the US through an acquisition of Move, and the underlying numbers that we're seeing in the US, particularly in housing sales, and that recovery there is particularly encouraging. So some of the parts valuation of News Corp looks particularly attractive at these levels, subject to a recovery in those digital real estate markets.
Really interesting stuff, Marcus. Appreciate your time and some of your picks there. Thank you.